traders, welcome to the TMT stock market strategy video for Friday, June 10th. We got a push lower, and then again, buyers at dips came in, pushed it basically to almost an unchanged market from yesterday. Does that mean that that's bullish? Absolutely not. I do believe that price is telling us that we're ready to go, and I do think that in the coming weeks, maybe even days, we should start seeing some weakness coming into the marketplace. There's nothing good about this rally. I call this rally suspect. I've been looking for a top in this market for the last 4 or 5 weeks. I thought it might happen in earnings, which earnings were dismal. Did not happen because, again, markets are made to fool the masses. And remember, guys, this technical video is totally unbiased. I could care less if I'm not a bull or a bear. This video, is all based on technical analysis. That's it. If the markets want to sell off, then I'll go with it. If the markets want to continue to rally to 2200, then I'll go with that as well. But right now, I'm seeing a lot of cracks, and for me, I want to point that out to you guys, and especially for the people that have IRAs, 401ks that manage their own money, their own trading accounts in a longer-term picture, such as swing trading or maybe even in a long-term investment style. You just have to be careful, and right now, it would be a great time for you to protect your investment by buying puts or just hedging against your portfolio, maybe buying an inverse because it's cheap right now. That's what insurance is for. You never know what could happen down the road. Remember, guys, gold is going up, and remember, I want to say one thing. Gold in June, and I follow gold and oil very closely. Gold usually is notorious for market sell-offs in June. Maybe this might not happen this time, but if the gold does decide to go lower, you might want to start looking at that, putting in that in your portfolio in the coming weeks. But gold is continually being bid up, and buyers come in on every dip, and that's something that you can't, you cannot just push to the side. You have to see this. It's totally apparent, and gold doesn't act that way for nothing. Okay, and it's acting as a safe haven. The dollar. If you think count the dollar out, think again. When we have extreme volatility, market participants will come and pledge and put money into the dollar, as well as gold. Those are two safe haven trades. Okay, consumer staples been bid up of late, so that's something that you also need to take consideration. Some of the biggest smart minds on Wall Street, George Soros, buying millions and millions of dollars worth of gold, getting active again since 2007, since the last debacle. Okay, that's something you have to keep an eye on. Say, whoa, what the hell? What's going on here? This is crazy. You got Carl Icahn net short in his book. I mean, this is something that, guys, you cannot take lightly here. Okay, in front of you, compliments of Bloomberg selling U.S. stocks around the world. Look at this. This is really bad. And when I say really bad, and I don't want to, not looking to scare anybody, I'm just saying, just be careful out here. I mean, you have since 2000. Look, I mean, even back in 2009, 7, and 9. Look, we still didn't have as much liquidation from worldwide investors. Look at this: lower lows, lower highs. This is not a good chart here for the equity markets in the U.S. So this is just something that I want to point out to you. This is a very, very good chart from Bloomberg, and I wanted to share that with you. All right, next is the VIX, and I've been talking about the VIX, that we have extreme volatility, extreme complacency, and at 12, 12 and a half, this is a long time view, very long time trend line that's been holding well, and every time it breaks below the band, which it did here and here, you get some sort of reversal. We had that that black candle here, and now we're looking to try to move higher here, at least to the top of the band. But if we have some extreme volatility, I mentioned many times, the commitment and trader reports show the speculative trader, the speculative money, in the report, it's the dumb money, are totally net short VIX, and the producers, the commercials, which are the smart money in the report, are extremely long. Okay, and as we all know, this is inversely correlated. So if VIX goes up, the market goes down. So just keep that in mind, guys. All right. Next is let me get that out of the way. Next is let's take a look at volatility. You could see here the put-call ratio is at extreme complacency. We were down here at 75. Yesterday we rallied up until about 90. Still very, very low. Once we get to 150, 160, that's when you might say, okay, maybe we might have the sell side might have run its course. But look what's happening. We've bottomed here in the stochastics, and of course, we're rolling back up to the upside. So, again, I just want to point this out to you. When you have extreme complacency, the market is up on absolutely nothing. And what I mean by that, there's no fundamental reason why the market's up. We're fully valued at 17 and a half, maybe 18 times earnings. Um, Earnings estimates and forward earnings are horrible. They've already mentioned that they're not going to do well this quarter. So why are we up for the last 9 or 10 days? Forget about even from the February low. Is because of the Fed talking its book, basically trying to talk the market up. That is not a good sign. Now you have the Brexit vote coming, which I don't believe they're going to exit. But if they did, if that was a big exit, it would create havoc around the whole world, at least in the short term, for at least a week or so. The dollar would spike extremely high. Gold would go through the roof, and the markets would sell off big time. So I don't think that's going to happen. The central banks and the Fed are obviously talking about it, and they would be crazy not to. So I do believe that's not going to happen. But if you have some sort of a big move and a big flush lower, you have to be careful. That VIX will explode. Okay, spiders and the ATR you could see here are down to these extreme lows again. And I pointed out here on these vertical lines, what happens when you get these extreme lows, you get a market sell-off. So it's in the cards, guys. So you have to be ready and available. And I think that's going to create volatility, creates opportunity. Remember that, okay? Now look at this. This is one of my favorite charts, advanced decline with volume, lower, lower highs, trend line. Look what's happening. We made new highs and we just curled over. Breadth of the market stinks. It doesn't look good. And it's something that you as traders need to be aware of. And I want to share that with you guys. I'm not saying that if we rally today, I'm not going to buy. Of course I'm going to buy, but I'm going to buy. I'm going to buy the market if it rallies, and I want high probability trades because the market rallies. That doesn't mean I'm going to be just going and buying the market. You have to have a setup. You have to have a plan. You have to have a model. When you have your trading model, that's when the model says to go in, that's when you go in. If not, you step aside and you wait. You wait patiently because when the volatility comes and your palate's nice and dry, you're ready to rock and roll, and you haven't gotten beat up on this chop, you're going to really shine in that, and that's going to make your month. So just be aware of that, guys. Don't have to trade every day, but be aware and be alert of what's happening in your surroundings. All right, here's the dollar. Just wanted to show that to you. Remember, guys, uh, I would not count the dollar out, especially if we start getting a pickup in volatility. All right, here's the spiders, just nice clean chart. You could see that I took the head and shoulders off. That was negated when we held that 200-day moving. So I'm looking for a revision to the mean back to at least the 206, and I'm going to show you why. Here's what I see, and I love looking at the 30 and 60-minute charts. A big, beautiful. This is a 60-minute chart of the spiders. We have a big, beautiful bearish rising wedge, and again, it's only bearish when it breaks and hold. I like to get a 2-day close to confirm that. We have a measurement of 206.50 in this bearish rising wedge, developing nicely. And this is something that I want you to be aware of. And remember, we need to close 2 times below. If we close 2 times below, I like to get the next back test. And so how I like to trade these. 2 closes below, and then of course we get a little bit of a bear flag back test below that trend line, and then you get that sell signal right here, and then you go for a move lower for that target right here. That's the way you trade a bearish rising wedge. Okay. Next is going to be transportation. You could see it did rally nicely the last couple of days, but it just fell apart again. You could see that. So that is our leader of the 5 indices that we follow is not leading. So that's really a big sign as well. Russell 2000, our secondary leader, obviously picked up the ball. It led nicely and beautiful, beautiful channel here. But look what's happening. We're overbought already. MACD, Stochastic, and RSI. So I'm looking for a revision back to the mean down to at least a 50-ish, 50 handle right about here. And then we'll see. We'll take it from there. But I do think that IWM runs at least to my proprietary channels here into one right around 112.13. Okay. Next and last is going to be the Qs, and the Qs has not done anything of late. You see, we've still been in a range bound for the last 9 trading days, and believe it or not, guys, most of the markets I see, you show a daily chart. Wow, when it's been going up, but really, it's not the case. They gap up and then they go sideways. So for the day trade, it's been very, very difficult for the last 7, 8 days, unless you come across some good opportunity. But there's going to be some great opportunity in the markets. Volatility, meaning the VIX, gold, and oil, okay? And watch them because those are going to be the big plays going between now and the end of the summer. And I do believe gold will get one more shot to go down Again, unless something really, really crazy happens. But if we have some quiet time as far as some news event, and I do believe that gold will at least give us a decent entry to get back in, and that you guys can get in gold and then ride that for a long-term play. Okay, have a great day. Enjoy the weekend. We'll talk to you on Monday.